Welcome back to Explain the Charts, where we break down complex market movements into actionable insights. Today, September 15th, 2025, we're diving deep into Amazon, AMZN, stock, examining both recent news and its corresponding chart data. Amazon stock closed at $228.15 on September 12th, experiencing a slight dip of 0.78% as investors weighed various factors. Recent positive developments include its Project Kuiper satellite internet business securing JetBlue as a client for 2027, which sparked a 4% gain late last week, and Amazon avoiding penalties in a Mexico competition probe. However, the stock has been under pressure following its Q2 earnings report on July 31st, despite beating expectations due to SOSO revenue growth from Amazon Web Services, AWS, and lower than forecast Q3 operating income guidance. A significant concern emerged when Amazon stock fell by as much as 3% on a recent Wednesday, attributed to Oracle gaining AI market share with its neutral stance in the AI industry. This highlights the intense competition in the cloud and AI sectors, where rivals like Microsoft and Google Cloud are also showing strong performances. Furthermore, ongoing regulatory scrutiny, like an FTC probe into Amazon's advertising practices and macroeconomic risks, such as President Trump's tariff plans, add layers of uncertainty. Despite these headwinds, analyst sentiment remains largely positive, with a strong buy rating and an average target price of $261.76, implying roughly 12% upside from the price on September 12th. Some bullish scenarios even project targets up to $350, driven by strategic investments in AI, AWS, and Project Kuiper, with R&D spending over $75 billion for 2025 heavily focused on these areas. Now, let's turn our attention to the daily chart to see how these news events have manifested in price action. Looking at the broader picture from May 2024 to September 2025, we can observe AMZN's journey, including a deep spring slide from which it rallied 25% through July. Notice the sharp decline following the Q2 earnings report around July 31st, 2025, where the stock dropped from approximately $234 to around $212. This immediate reaction underscores market sensitivity to growth projections, especially concerning AWS and AI, even when overall earnings beat expectations. The stock has since been in a recovery mode, but has struggled to reclaim its prior highs, suggesting lingering concerns or strong overhead resistance. The 52-week high stands at $242.52, while the 52-week low is $161.38, providing a clear range of movement over the past year. Let's zoom in on the daily chart, specifically around the Q2 earnings period from July 1st to August 31st, 2025, to pinpoint key support and resistance levels. Before the earnings report on July 31st, Amazon was trading around $234, which acted as a strong resistance level following the subsequent drop. The steep drop on August 1st found initial support around the $212 to $215 range, a critical level that held firm during the recovery attempts. Any retest of this $212 to $215 area in the short term would be a crucial indicator for bulls and bears. Currently, the stock is consolidating around $228, with the previous resistance around $234 to $236 being a significant hurdle to overcome for a sustained upward trend. Switching to the 1-hour chart gives us a clearer view of the recent intraday movements, especially around the September 12th trading session. We can see the stock struggle after reaching highs around $238 on September 9th, facing immediate selling pressure that led to the decline seen on September 10th and 11th. The hourly candles confirm a consolidation phase in the $228 to $230 range towards the end of last week, indicating a battle between buyers and sellers. The intraday low around $226.29 on September 12th served as immediate support, but the overall trend remains downward from the early September highs. Short-term traders should watch for sustained breaks above or below this $228 to $230 consolidation zone. Now let's narrow our focus even further to the 15-minute chart for the final hours of trading on September 12th. This granular view shows the rapid price fluctuations and the high trading volume around key news announcements. The dip to $226.29 was met with buying interest, as indicated by the subsequent higher closes, suggesting a short-term bottoming effort. For intraday trading, the quick reversals and tight ranges seen here emphasize the need for precision and real-time news monitoring. Any break of the $228.50 level on higher volume could signal a short-term bullish move, while a drop below $227 could lead to further declines. Returning to our daily chart, let's recap the important price levels and consider the unbiased predictions for Amazon. Key resistance levels to watch are the recent high around $238.85 and the 52-week high of $242.52. On the downside, critical support can be found at the Q2 post-earnings low of approximately $212.80, with additional strong support near the 52-week low of $161.38. A bullish scenario, where Amazon reclaims $240 plus, has a moderate likelihood, around 60%, especially if Project Kuiper or AWS AI initiatives show tangible, positive financial results, or if the overall tech market experiences a strong rally post-Federal Reserve meeting. Conversely, a bearish scenario, where Amazon drops to retest the $212 to $215 range, also carries a moderate likelihood, around 55%, particularly if Oracle continues to gain AI market share. If the FTC probe escalates or if broader macroeconomic concerns, like potential tariffs, dampen investor confidence. Investors should look for updates from the upcoming Federal Reserve meeting this week for market-wide sentiment shifts. Further, keep a close eye on Amazon's announcements regarding AWS growth, new AI partnerships, and Project Kuiper developments. Volume spikes on upward moves near resistance or downward moves near support will be crucial indicators for confirming breakout or breakdown patterns. For long-term traders, maintaining a diversified portfolio and watching for clear trends above the $240 resistance or below the $210 support is advisable. Short-term traders should pay attention to intraday volatility and look for confirmed patterns around the current $228 consolidation zone, using tighter stop losses to manage risk. Always remember that market conditions can change rapidly, and thorough research is paramount before making any trading decisions.